Come here. Let me guess. You're feeling mixed emotions right now. Oh man, so Bitcoin surges up towards the $21,000. Is this heading for another pump, or is this just a bear trap? A lot of you guys have been messaging me with mixed emotions. A lot of you love this pump, want it to continue, but then there's a group of you suffering, trying to wonder when are you going to get your next entry point. If you're new to crypto, hopefully you've experienced what it feels like to have what I'm going to call a mini pump, because trust me guys, if you've seen a bull market before, this is absolutely nothing. I wouldn't even call this an appetizer. So now you've entered crypto at the right time, ready to learn. Get yourself set up. We're going to talk about in this video whether this is a bear trap, whether there's another move coming up, and what the key levels are. We're also going to take a look at Fantom, because Fantom is up another 9% today, sitting at 32 cents. What's in store for Fantom? What are the key levels? We're going to jump in the chart. Smash up likes. Don't forget to subscribe. As always, check out the links in the description, guys. If you missed out on this pump, trust me, there are a lot more opportunities coming, and I'm going to be sharing them with you in the Telegram. Make sure you join our Telegram. Free alerts in the Telegram. Make sure you set up your exchanges using the links in the description. You get some amazing bonuses, and this is going to be exciting. I'm going to explain why in this video. As you can see, Bitcoin's been on an absolute tear here. I'm sitting on the 4-hourly chart, and it feels like a very long time ago that we were sitting at 15,500, but the reality was that was just the end of November. So this now proves to everybody how much strength and power there is in Bitcoin. Bitcoin continues to lead the market, and that is why I always tell our members, which if you want to join, by the way, ijaz.uk/member, I always say to those guys, never neglect Bitcoin and Ethereum. Those are your vegetables. That's what we say in our little community. We say, guys, eat your vegetables. Eat your vegetables. Yes, the fund's going to be there with other projects like Fantom, which we'll cover off shortly, but you've got to eat your vegetables. Those are the anchors of the portfolio. You may not like that, but that's how the crypto market continues to move. So we've seen a nice big move here up to 20,000. But as you can see, this is no surprise here that we're getting this little bit of red candlesticking going on. I'm going to explain exactly what that means. Is that something to be worried about, or is this going to present another opportunity? Let me now bring out the drawings, because we followed this pattern perfectly to the T, guys. If you go back and watch the videos or jump into the Telegram, you will know I alerted of this pattern around this period on the 4th and 5th of January, right? We saw this reversal pattern forming. We were sitting here around this price point, in the 16,000 somewhere, and we said that we were forming what is a typical double bottom reversal pattern with neckline triggering at 17,800. If this is all gibberish to you, ijaz.uk/TA, you're going to learn all this stuff for free. Nobody is giving this type of technical analysis content for free. You've got everything you need in this community to take advantage of the next trade, right? You guys could be profiting from this. We showed you the price target working all the way up to 20,000, and I took profits at this point. Yes, you could have got a little bit more. My long-term portfolio is separate, and again, you guys need to understand this. Majority of my portfolio is long-term holds, right? And that's benefiting from this whole move, but obviously I held it through the lows as well. My trading portfolio is different. I'm in and out. I'm badgering in, I'm badgering out. I took this trade, I ran it up to my technical profit, and then I take my profits, I'm done with that trade. Then I look for the next trade opportunity. But my big long-term bag, it's benefiting from this move, okay? I want everybody to understand that. Very important that you have separate trading portfolios and separate hodl portfolios. Never let one become the other. One of the biggest ways I can spot somebody who's new to crypto or new to trading is they take a trade. When the trade moves in the direction which they didn't expect it to, I'm going to hold the Bitcoin anyway. No, wrong behavior, amateur behavior. That's going to make you an unprofitable trader. Very important that you stay disciplined. You take your profits. You enter on the breakout when the rules form. You see the volume candlesticks coming in. You feel confident. You take the position and you get out. You don't be greedy because, oh, we're going to get to 21. We're going to get to 22. You take your profits. For your long-term bag, that's great. Let Bitcoin go to 23, 24, right? So that's the first thing. Now we're seeing that candlesticking. And you can see it's not happening at an arbitrary level. Where are we getting rejected? We're getting rejected from this 21,000, just shy of 21,000 mark. That's that blue line which dates all the way back to the previous bull market high. Okay, I'm switching this up. I know this looks messy, but bear with me. That's this blue horizontal line here, which dates back to your December 17 bull market high. So this is not a coincidence that we're seeing a little bit of resistance here. Remember, what do bears do? People who want the price to go down, what do? Well, they sit there and they wait. Think of like kind of soldiers behind a little trench. They sit there and they wait to short you and sniper you from there. Okay, so they sit at key levels. They would have been sitting at 17,800, they got wrecked. They'll now be sitting at that 21,000, they're getting a little bit more joy because obviously a bullish move can only have so much parabola to it without having to come back to collect some support. And those are healthy retracements. And if you're looking for the next opportunity, you want to be looking for those retracements. Guys, take a look at this. $750 million of shorts liquidated in just 24 hours. And this is how powerful the market can be when it decides to rotate against you and you're sitting there shorting, you're going to get wrecked. And that is why you never see me shorting positions. I'm always on the offensive. I'm always looking to add, and I don't go into leverage out margin trading. Those are all short-term things aimed to try to make you a quick buck. But as anybody knows, anybody who's looking to build sustainable wealth has to do so in a pragmatic way. You can't be looking for these get-rich schemes of using 10x, 20x leverage, or using crazy shorting tactics. That's why I do things the patient way. Okay, so let's now try to identify some levels of support. If Bitcoin does retrace down now, what are those key levels? Well, as you know, I've just shared with you, we're getting rejected from that blue line, right? That's the previous bull market high, sitting at around that 20,800, 21,000 mark. Naturally, your first level of support, the best result for the bulls, is only to come down to 20,000 and then run off again. Okay, that would give you very little opportunity to re-enter a new trade, and ideally you'd want a bigger retracement if you're looking to get into a position. But that is the first possibility. If the bears are weak, they can push you down to 20,000 and then the bull's going to come climbing back in. Alternatively, a more powerful retracement, and what I think is going to be the base case, this is the one I'm looking out for, is will the bears be able to push us all the way back down to 18,700, 18,800 range? Remember, that's the point where we entered back into our channel. And this is why I'm so impressed with this move, guys. Like, a lot of people are just getting excited like this is a technical only move. No, this is a major fundamental shift we've just had. We need to understand that this move has not just happened on a whim. It's not just a bunch of people buying Bitcoin for no reason, which we have seen in the past. This is not speculation. I always said that this downturn is categorized by the fact that we are entering tightening policy in the global economy. Central bankers are tightening, and we've monitored that throughout 2022. Now, this pump ties in perfectly with the data we are seeing, the improving trends we are seeing. We just had a triple beat on inflation. Markets are now pricing in just a 25 basis point move at the next meeting. A decent proportion of the market is expecting a pause at the next meeting. Things are fundamentally shifting. And I always said when that shift happens, when that U-turn happens from the Fed, that is when we can finally start seeing small moves on Bitcoin. But remember, this is just a start. Don't think this is just going to run into the next bull run. No, there will be many more challenges for the global economy and therefore for Bitcoin, because risk will rotate on and off throughout this year, in my opinion. But it's good to see the life in Bitcoin. It's good to see that Bitcoin has managed to get back to pre-FTX levels. I mean, the number of haters Bitcoin would have shut up in just the last couple of days, it's just completely outwound not just the FTX saga, but the Terra Luna saga as well. Remember, Terra Luna dropped us down to 17,800. So we've undone that by running up to 21,000 as well. This has shown tremendous strength of the Bitcoin network in suffering its biggest crisis of all time. So that's the level I'm naturally looking at, is can we come back down and get a retest at that 18,700 level? Now, it's important to remember that if we bring out the EMA ribbon, where does that come in? You can see the EMA ribbon currently is sitting at 17,600. That is my absolute base case here. If the bears do a tremendous job of putting this bull move back down, they could technically get it down to 17,600, but I expect that to hold. Remember, we held that after Terra Luna collapse and we ran back up to 25. Then we came all the way back down here because monetary policy was still struggling. Then we had Sam Bankman-Fried throw us down to 15,500. After that, we ran up. We got rejected by 17,600. We fell back down. We ran back up and we've exploded through 17,600. So worst case scenario, it's fine if we come all the way back down here and see a retest. What an amazing opportunity to then enter as another opportunity, having seen all the strength that Bitcoin has had, to then get another opportunity at 17,600. But that is not guaranteed. That is the last case here, in my personal opinion, is the retest at 17,600. More likely is this level at 18,700, which would be beautiful if it holds. And even the best case scenario for the bulls is a small retracement and off it goes again, right? But I think that one is less likely. Okay, so that's our EMA ribbon. Let's also take a look at the VPVR. And this is a very, very important indicator to look at. Remember what I said, the point of control was always sitting at 16,800. And that is why it's no coincidence that once we push through this level, what did I say? The volumes thin out hugely between this. This is why you've seen us gap up so quickly. There's a huge liquidity gap. And that is why Bitcoin's been able to move so quickly with modest volume. Right, with modest volume. So you can see that just above my head there. In fact, let me move me out the way just to make sure I'm not in your way there. Look at that. I just want to emphasize this. This is the gap, okay? This is the gap that Bitcoin's been able to fall. But the volume gets a little bit more serious up here. You do get a little bit more volume here. So I will expect a little bit of difficulty compared to what we've just seen. So that's the VPVR showing us the similar trend. Now, it's always important. Sometimes you can get caught up in hopium because the day trend is showing us a really nice trend. We got to zoom out. And so what I'm going to do now is zoom up to the weekly chart. And this is where we're going to start to get some perspective. This is where I start to say, guys, let's not get overexcited here. Let's understand what is going on. Just very objectively, what are you seeing? And what you'll notice is we've got to respect that the bears still hold this trend. Now, I know a lot of people who are really excited about this move. I'm one of them, right? I want Bitcoin to explode and wreck all these shorts. But we've got to understand what situation are we running into. For the first time since back here, on the 21st of March 2022, Bitcoin has been in a huge retrace, and it's the first time we've touched the EMA ribbon. Okay, it's the first time we've touched it, going from the bottom side to test it. Now, there will be huge levels of resistance into this EMA ribbon. For me, the question is, how much into this EMA ribbon can we move? Can we move to the top of the EMA ribbon? That would give us 26,000 at the top of the EMA ribbon. If it's the middle of the EMA ribbon, you can make an argument for why we'll move to kind of 22.5, 23,000, or the argument could just be we're going to get a retracement from here and we're going to have to rebuild. Okay? Either way, you're running into resistance. I do want to emphasize that. Another way of me emphasizing this is bringing out the VPVR again. Where are we? We're in a period of huge resistance right now. We're in these 3 big blocks right there. This is resistance. This is the point of control. So I do want to put these things in front of you because we can't just get too excited on crypto Twitter that, oh, look, Bitcoin's pumping, another 5% today, another 3% today, so exciting, all coins are moving. No, you've got to look at the data ahead of you. We can't just ignore it and bury our head in the sand and say, oh, that's not happening. It is happening. So let's look at it and understand the risks. Okay, so that's one thing here. We are running into resistance, so it's not going to surprise me to see a bunch of shorts with their snipers trying to take out the overambitious logs. That's why if you're trading on a short time frame, you want to be jumping out at certain time frames. Your long-term portfolio, you're absolutely fine. I just leave that and I continue to DCA. And again, through this pump, you guys are seeing the importance of DCAing. If you were DCAing a Bitcoin of 15,500, amazing. If you were with me DCAing a Fantom, which we're going to come on to very shortly, I've just been waffling on, but if we're going to carry on to Fantom, if you were DCAing around that 15, 16 cent mark, you've doubled up on your money. You've doubled up on your money before Fantoms even started. And that is the power of DCA. So this is really important, is this volume control. One more thing I do want to show you is the Bollinger Band. Let's show you the Bollinger Band, and you can see here in the weekly, you are running to the top of the Bollinger Band. So all the things I show you on the weekly do in fact suggest we are running into resistance. But that's normal. In order to flip the trend, you have to run into resistance. We can't be scared of resistance, but we have to acknowledge it's there. We have to acknowledge the 200 exponential moving average is there as well, this blue-colored line, and therefore it will not be easy. Expect some volatility, expect some moves into it, and some rejections. The bears are not just going to give up. They've done all this hard work. They're not going to give up. They're not just going to let us reclaim 25, 26, and off we go. The exciting thing then happens once we cross this chasm, once we get through this tunnel, we start looking at the journey from 25, 26,000 beyond. Then we've got the trend. We close a weekly candle above the EMA ribbon, things are looking rosy, and we can get to work. But for now, we are running into resistance. Just wanted to emphasize that. One more thing before jumping onto Fantom, I want to share the Fear and Greed Index is sitting at 46, guys. 46 on the Fear and Greed Index. When is the last time you've seen this? Well, I've done some research just to show you, and you can see that this Fear and Greed Index spike here dates all the way back. We've not been at this level since 14th of August. And on the 14th of August, Bitcoin was at 25,000. So again, to put that into context, where was Bitcoin at that point? I'm going to show you it was about here on the 14th of August after we fell from Terra Luna and we recovered on our journey back towards 25. It was at that point that we were sitting at the level of Fear and Greed Index that we're at right now. Right, let's take a look at Fantom. I know you guys are super eager. You guys have been bugging me, and I love you guys loads on Twitter for updates on Fantom. Let's bring out the drawing so we can see exactly where are we. And look at that, guys. Like, you can't script this stuff. And this is why anybody who says TA doesn't work, like, you've lost the plot. Look at my take profit target. 34 cents, and you would have exited there at 30, 34 and a half. By the way, remember, you never take profits exactly at the target because shorts sit at your take profits. They're doing the same thing that we're doing. They know where you're trying to take profits, so they wait for that point. Always do it on random numbers. Like if the price target is telling you 35, do it at 34 and a half. Do it at 34 even. Start trimming at 33 and a half and taking a quarter off and another quarter off. These are all the things you'll learn in trading, and you'll learn it in my TA course, ijaz.uk/TA. So that's important. So you can see here, we got the break of the neckline 25, huge move up towards that 34 level. Where is the support? Again, this is going to follow the Bitcoin trend. So everything I've just shared with you plays out for Fantom. If we get a small retest, you know, even up to 30 is absolutely fine. You can come, you can see that is the level we got rejected from here. So you can turn that into support and off you can go on your next journey. That'll be the nice case, right? If Bitcoin plays out the easy case as well. The more longer case is, do we come to test the neckline? Again, absolutely fine, but that's a great opportunity to start entering back in again at that 25 mark, ready for the next leg to the upside. A little bit more of a severe retracement is, do you then come back down to the 24 cents level mark? And that is where you'll see Bitcoin when it's trying to get back into the green channel, which I shared with you guys. Very important that we also take a look at our EMA ribbons. And you can see here on the daily chart, huge extension, getting some rejection from her 200 exponential moving average on the daily chart. Again, we don't just get rejected at these levels arbitrarily. These are key technical levels which we need to understand. So you can see that we've got plenty of space to retrace, right? Fantom can come all the way down here. I don't expect it to, but it can comfortably come all the way down to 24. And that's really, if you're looking for the next opportunity, always look at the EMA ribbons. Try to get in closer to the EMA ribbons. When you're extended, oftentimes that's maximum wreckage. That's the way I like to think about it. If I bought Fantom now, that's the wreckage, right? That distance there. If I can buy closer to the EMA ribbon, I'm minimizing the wreckage that we're experiencing, okay? Now, let's flip this up to the weekly. And again, similar to Bitcoin, I want you guys to understand, we are in a huge downtrend. We are running into resistance, and that's no different. Hugely powerful, extended weekly EMA ribbon. It's not going to be overnight that we suddenly just work our way through this and suddenly flip it bullish. But this is a really good sign. And the reason this is a good sign is it's a huge macro shift. Things are not the same. You can see that 65% of the market are pricing in 25 basis points. You've now got 35, that's not insignificant, 35% of the market expecting a pause at the next meeting. So let's say we don't get a pause at the next meeting, we do get the 25 basis points. Then what the market is basically saying is, we'll take 25 basis points and we'll pause at the next one. So however you want to look at it, the market is all in on this notion that we will pause the monetary policy hikes either at the next meeting on February the 1st, which is 2 weeks away, or the other option is March the 15th. So either way, we are not far away. We're expecting a pause. Huge. We're expecting a monetary policy pause in Q1 of 2023. Far sooner than a lot of people were projecting. And this is why this crypto pump is not just excitement. It's not just traders. It's not just gambling. It's not just speculation. This is a fundamental shift in the economy, because if we're rotating from tightening policy to loosening policy, we always know that crypto's biggest pumps come when monetary policy is loose, when access to capital is free, when interest rates are being lowered. One final thing before I let you go. I'm trying to make this a jam-packed one for you, because I know loads of you are having loads of you had loads of questions when the market is this excited. Make sure you're in our Discord, make sure you're in our Telegram. So if you have any questions between these videos, because the market's moving so quickly, that's where the updates are going to be. They're also going to be on Twitter as well. Dollar index on the weekly, huge correction here. This is beautiful, right? First we were looking at it as the daily. I took this, I was happy with the daily correction. But when we see the weekly correction, that is when it really started to get excited. We had that a couple of weeks ago, and now another big red candlestick. When I look at this, this is just telling me that risk is rotating on. And when risk rotates on, risky assets benefit. Growth stocks, crypto, starting with Bitcoin, Ethereum, and then altcoins as well. So, moral of the story, guys, make sure you're staying safe out there. Don't get overzealous. Do not have green candle disease. If you're new to crypto, hopefully you've seen the potential that you can get and why so many people are excited about this asset class. One of the craziest asset classes ever known to man. Huge spikes, huge dumps, huge volatility. If you don't have the psychology, if you don't have the mindset, it's going to be difficult. But if you're looking for the next opportunity, if you miss this one, it's coming soon. Make sure you set up on the exchanges, links in the description. Make sure you're in our Telegram. Make sure you've started watching my TA course, ijaz.uk/TA, because we're going to get a lot of these opportunities as we start to rotate risk back on, and you guys can take advantage of it. Thanks for watching, guys, and I'll see you in the next one.